I'm Janet Duchesne, and I'm editor of Global Custodian magazine. The sub-custodian industry faces unprecedented change as regulation compels sub-custodians to look at the suitability of their business models for the new norm. Today's roundtable discussion looks at the changing role of the sub-custodian and whether, as a result of regulation, they're geared up to not only continue to survive, but also continue to thrive.
Hello, I'm Margaret Harwood-Jones, Managing Director at Standard Chartered Bank. My responsibilities worldwide are for our transaction banking activity with our institutional investor and financial intermediary clients.
My name is Philippe Ruot. I run product development and management for sub-custody, global custody and network management at BNP Paribas Securities Services.
Hello, I'm Colin Brooks. I'm the global head of the sub-custody and clearing business for HSBC Securities Services.
To kickstart our discussion, I'd like to start with an overview from each of you on the sub-custody landscape and what you'd consider to be the main drivers of this business and how that will influence the next few years. Margaret, if we could start with you, what are the issues?
Okay, I think the main issues that we're seeing is the need and the challenge to respond to client demands. And I think our clients are very focused on cost optimization, operational efficiency, and particularly around risk mitigation. So they are the things that are front of mind for our clients, and therefore they're front of mind for us as a service provider.
Okay. And Philippe?
On our side, I think there's a big rush towards quality. Clients are seeking for the best cut-off times, some new services on proxy voting, tax services. This could be enabled by new technologies such as big data, new reporting tools that we can provide to clients. So I think there's a definitive rush towards quality. There's also investors seeking new investment opportunities across the world. There's a rush as well to open sub-custody branches in new markets. It's what we've done in US and in South America as well.
And Colin?
I guess no discussion on the custody business would be complete without a mention of regulation. And there's obviously a huge number of moving parts in that respect. I think we're also seeing a lot of changes in the markets. There's T2S, obviously, that I'm sure we'll talk about in due course in Europe. But in Asia, we're also seeing a lot of infrastructure changes. And so those are taking up quite a lot of time and also quite a lot of resources and so on. And basically, I think the role of the sub-custodian is to insulate our clients as much as we can from those changes that are taking place.
And speaking of the client, I wondered if we could comment a bit about their demands and how their requirements are changing in the new regulatory norm. For example, how their purchasing habits changing and how this is impacting their bargaining and pricing power. To start. Margaret, what are you experiencing?
Well, I think then when you talk about clients, Janet, it probably depends on the client that you're talking about, whether you're speaking around a global custodian, a broker-dealer, or indeed an institutional investor client. For Standard Chartered Bank, and given particularly our growing franchise in Africa, we're seeing huge demand, especially coming from the global custody clients, to make available to them and to support their underlying clients a more detailed understanding of some of the market developments and changes that are occurring in those geographies. They want a better understanding of just how to operate in those geographies. So that means our interaction and our interface is not only with our own clients, but also very often, and more often now, directly to those underlying clients. I'd probably take it a step further as well, because again, our clients are expecting us to be able to participate very actively in infrastructure developments, in regulatory developments, in some of those newer emerging and frontier markets. So not only must we respond outwardly to our international clients, but also be very active on the market, working tirelessly with development.
Thank you for the response, Margaret. Philippe, are you seeing similar things with your clients?
Yeah, I would split as well as Margaret did, global custodians from broker dealers. What we see on the broker-dealer space, and since recently, is really a lot of questioning around the liquidity and credit. I think our role as sub-custodian is also to provide credit. We see much more demand for disclosure of credit lines, commitment of credit lines. This is maybe correlated to the fact that T2S brings new facilities. We'll come up to it later. So to me, broker-dealers are really focused on optimization of their liquidity. We'll see also demand for back office outsourcing, with all this regulation, all this adaptation to make, at least in Europe, we see some broker-dealers wishing to outsource a bit more of their processes, whereas it's pure post-trade back office, but also middle office services. This is something on which we have invested since the last couple of years. On the global custodian side, I would say it's asset safety is a key trigger on protecting the assets of their clients. So looking at a lot of segregation up to the CSD level. So it's where we see a change of behavior recently from global custodian linked to AFMD and UCITS 5 directive, where they're looking at really optimizing the asset safety at the lowest level of the infrastructure.
Colin, how about you? Do you share the similar observations?
Quite similar, yes. I think certainly for the broker-dealers, they are very, very cost-driven currently. They have been since the financial crisis. But they're not just looking, I think, for reductions in transaction costs and reductions in custody fees. They're looking for end-to-end solutions. And that's one of the reasons why HSBC launched its BOSS broker outsourcing service for broker-dealers, which enables us to move up the value chain and enables brokers strategically to make a meaningful difference to their cost base. As regards global custodians, they too, I think, are very focused on cost, and we have some interesting pricing discussions. But I think also we should bear in mind that both custodians and brokers also have to be able to explain their selection of sub-custodian to their internal risk committees, to regulators and so on. So actually they need to be able to demonstrate that they've appointed the best sub-custodian in the market. So cheapest isn't always the best choice.
I would tend to agree. We have seen a bit less, since the last 2 years, a bit less pricing pressure. At least in Europe, maybe we have reached a rock bottom prices level, but I think we have seen much less pricing war. I mean, there are very few providers being able to cope, with all the investment to make with regulation and so on. I think we are part of the provider being able to cope with it, and there's less pricing pressure, I would say.
But I think some of the changes that we've remarked upon, certainly we see that in our business, clients are beginning to buy differently. We're seeing a lot more interest in sort of regional propositions. And I think if you think of parts of the world, perhaps where there's a number of small or emergent markets, it's quite difficult to be efficient and effective to make decisions on a sort of market by market basis. So again, Africa is a very good example where we are seeing clients, today they may only be active in 2 or 3 markets, but to establish a relationship with a regional proposition is what's happening, knowing that they have the flexibility then to sort of change those market components as their own needs change, but still sitting within a structure of one relationship, one contract, harmonious service levels, and other sort of simultaneous aspects across those relationships. So that's a change and certainly something we're seeing more interest in.
Yeah, I agree. I think clients are increasingly looking for individual solutions, and that's where, as custodians, we have to have a very flexible platform that underpins what we do, and we have to have a flexible mindset as well. We need to be able to talk to clients about what it is they require, really understand their business model, so that we can then offer meaningful solutions to them.
Does that scale offering, given that clients are different from region to region, how does that kind of impact your business model, given that the investment required is very heavy, and to be able to accommodate clients to quite bespoke levels, it seems, is quite challenging. How do you manage that?
I mean, just looking at it, for example, from the broker outsourcing perspective, we have a very modern platform. It's a rules-based platform, So it means that we're able to cater to all the different client requirements, but without doing a lot of programming to accommodate that. So it's very cost effective, it's very quick, and it means we can provide a tailored service, but in an economical way and in a commercial way.
And I would like to be a little bit more provocative, because I think on occasions it's not good behaviour to let clients become very bespoke in their needs. So actually, as a sub-custodian, I think we have a role and an obligation to try and adhere to best market practice, to global standards wherever possible. So the skill is knowing where to flex and bespoke tailor solutions, but also where to stay very good to the core.
Yeah, it's a real challenge, I would say, especially where I see on the target to securities scope, where we've been engaged in, very detailed conversation with global custodian broker dealers, in specific models such as, asset servicing only. We had various combinations, so spending a lot of time, designing specific models, which at the end combines to a kind of family of models, which is good news. But this requires a lot of investment, and probably you can't reach scale if you design too much bespoke models. So it's a key challenge, I would say.
I think that would lead nicely on to the next question about sub-custody risk, the level of risk you're being asked to take on given the regulatory change. How does this must be affecting your business models quite a lot in the past few years. Has that bedded down? And
I think operational risk will stay. I mean, processing corporate action, tax, and so on drives a number of operational risk that will not, I think, decrease, especially when some clients are looking, for models such as, asset servicing only, where you just process corporate action, you don't have the flow and so on. So it's you handle a lot of risk. So I don't see this reducing. Credit risk as well. As we finance clients, during the settlement process, we take intraday and overnight credit risk, and I see this as potentially increasing, especially with clients asking, to review all the contract terms on the right of set-off, lien on the assets, whereby we have no recourse to assets in case of default. So it's a key concern revisiting what will be the contract terms going forward, and how does it impact our credit exposure to some of the clients. And I think on asset safety, I would say that sub-custodian, anyway, on our contracts, we are responsible for everything. So I would say even the pressure, I mean, apart from the bankruptcy of the CSD, I think sub-custodian are more or less liable for most of it. So this will stay as it is, I would say.
Obviously, that's pretty heavy.
I think one of the key aspects actually is being able to help our clients identify where there are risks in the settlement process, in the corporate action process, whatever it is, and explaining to them how we manage those risks. I think they need this. Again, it's not just internally, but it's also to explain to the regulators how they in turn are managing the risk, how they're protecting investor assets. And so we need to work, and are working very closely with our clients to do just that, to really see and examine under different scenarios, where do risks occur, where could they occur, and how do we actually manage those risks on their behalf.
I think that's quite an important point, because I'm sure, representing our varying institutions, we would maintain that we've always been in the business of managing and mitigating the risks of the activity that we undertake, especially in environments where there's ever greater complexity and the operational risk associated with that. But I do think now, in terms of the clients that work with us, their level of scrutiny and need to really understand that risk profile, and the efforts that they should undertake and that we should undertake to manage that collectively certainly leads for a very different due diligence and scrutiny than perhaps we saw in the past.
Well, and also, of course, there's starting to be scrutiny on us as sub-custodians ourselves, and what happens if you go into liquidation, what happens to my assets, and also starting to be discussions, I guess, similar to as there were after the financial crisis with the prime brokers. Okay, if you go into liquidation, what arrangements can be made, the sort of living will arrangements to make sure that the assets are both protected and also accessible. And we're entering into discussions of that sort with one or two clients now.
What we see from the big investment bank as well is the intraday credit risk, which today is more proposed as undisclosed, uncommitted. And there's a lot of demand now, to disclose, intraday credit lines and to commit maybe a bit more, whether it's potentially collateralized lines, but much more committed, so that at least investment bank knows what happened in case of market stress, that they still have a buffer of liquidity provided by their sub-custodian. I see that as a big trend, at least in Europe.
And just one point probably to add to that, where I think the whole sort of sphere of where we are commenting on risk is also changing. And I think, partly stimulated by the direction of regulation, where our own clients need to more deeply understand market risk in the broader sense, even before they entertain an investment in a certain market. And I see more and more often examples of where we are asked to support and contribute and opine on market risk. So again, that need and requirement to be able to explain how markets operate, who are the varying counterparties, how clients should set themselves up if they're thinking of investing in country X or country Y. And again, I think that was conversations that perhaps we didn't get involved in quite the same way, certainly before the crisis and the latest directives from a regulatory perspective.
So asked to explain, is that driven by the client asking for help in those areas? Or?
I think so. It's, if you are an asset manager and you're thinking about the strategy of a particular fund, obviously a regulated fund, then the obligation on you as manager to really understand the risk in the market that you're thinking of investing in. So not necessarily custodian risk or operational risk, the things that would be very clearly in our domain, but more broadly to, the manager needs to understand the risk that he will be taking in the investment that he makes. And more often I think he's soliciting any opinion that's available and possible to help influencing his thinking and his determination around particular markets. So that's the piece that I think we're now getting involved in, which certainly a few years ago we weren't seen to be a sort of recognised opinion contributor.
Yeah, and just to add to that, I guess the global custodians in particular are focusing very much on that because the burden of regulation, the burden of liability in many ways has passed from the fund managers to the global custodians as depositaries, particularly under the AIFM in regulations, and that will only increase with UCITS 5 coming in. So I think that's one of the reasons why we're seeing much more focus on that particular aspect.
All right. Okay. Perhaps a good time to go into fee structures then. Do we think that these will change significantly? Have we seen much change, and is that, or are those conversations regarding repricing, if we're having them, becoming easier given these changes and requirements from the client?
I think there are two aspects to it. I mean, there's first of all the fee structures of tariffs, and then there's the level of fees. As an industry, we actually have a very, very simple fee structure. We charge for transactions and we charge for the value of assets under custody. And yet, despite that simplicity, it still leads to huge reams of paper, it leads to problems in reconciling and so on. So there's a lot of talk about unbundling, but how that would actually emerge is really quite difficult to see when we have so much of an administrative burden underpinning the existing structure. I guess change will come in because of T2S, and that will bring about some change to the tariff structure. But exactly how that will come about, I guess, is a question that we can perhaps discuss a bit later. But in terms of actual levels of fee, I think we will continue to see fee pressure. It's been in the industry for as long as I have been. And to be perfectly honest, I think that benefits the business because it stimulates growth in transactions, it stimulates market activity. And if you look at a long-term trend, that growth in activity more than outweighs the attrition on margins. And so we see revenue and profit on an upward trend.
Okay, that's interesting.
I think we did try to change a bit the fee structure with T2S because I mean obviously there is some pressure on the settlement prices. It's quite difficult to really move some revenue from settlement to asset servicing because clients are not ready to pay. So we have introduced per event and so on additional fees which are not accounting for a lot of growth. So I don't see that there will be drastic changes in terms of fee structure. What we have achieved, nevertheless, is the unbundling of the CSD part. So we are now much more transparent in terms of the way our fee structure is managed, and we disclose to clients, okay, out of the fee structure, this is what we pay to the infrastructure. And now that our prices are close to the one of the infrastructure, it's quite interesting for clients to see who adds what in the value chain. So that's one of the aspects that we've done, and now we are thinking around the big debate around pricing of liquidity, where potentially where we have some liquidity cost, the client would be liable to pay liquidity charges, which might not be obvious in T2S because the market is structuring itself to optimize the liquidity through auto-collateralization and so on. So as soon as clients will stay with us in an omnibus basis, they might have no liquidity fee to pay at all.
No, and I think from our experience, I'd echo a lot of what's already been said. Absolutely, we still see price compression from our clients. Also see this desire for a greater level of transparency. So clients wanting to understand what are the drivers that are existing, how do you construct the rate card, what are the variables that you need to be compensated for. So I think a lot more deconstruction of rate cards is certainly what we're seeing, but completely accept that then, the burden of coming up with very complex invoicing or tariff schedules can then be difficult to administer. The unbundling argument, I mean, it's always been discussed in the industry. I guess personally I would have, I think, quite some challenge if I was looking to bundle a rate card, say for a client that was taking services in markets such as Hong Kong and Singapore, to bundle that in the same rate card. If they're working with us in Ghana, Zambia, how do you get the right common approach across that is quite difficult. The other as well, staying with transparency, if you look at elements in the commercial proposal outside of fees, and for me FX is a very good example of that. That's clearly an area where clients absolutely want to understand the performance of the FX, the tariffs, how we benchmark that, how we demonstrate the commercial value that's being derived from that source, again, is quite an important topic in conversations that we're having.
If we can turn to some of the regional developments, I wondered if we could take time to comment on those challenges and opportunities, and what are the shared learnings that in your business from market to market that you're seeing. Margaret, will you?
All right, so I'm going to come back and then talk about Africa, because Africa is a region for us that we find exciting, and our clients are telling us that is very exciting. It's clearly growing actually quite rapidly in parts. So when you look at stock exchange market capitalisation, I think it's grown in sort of 4% over the last decade. It's now growing at about 19 or 20%. You're seeing very active development in that market around pension savings, around insurance, actually around other forms of sort of retirement savings. So all of those things are beginning to stimulate, thankfully, a lot more development and automation coming in market infrastructure. So we can certainly see that the momentum is beginning to drive there quite hard. I mean, interestingly though, that it's only just been this month that one of the last, or the CSD in Zimbabwe, has now gone electronic. So you sort of feel that you're getting to a point where some of, I guess, what we would describe as, you know, the basic necessities in life to conduct your business in that market are now becoming evident. So, you know, in terms of what that means to us, we need to be very nimble and flexible, quite fast moving, given this increasing rate of change. But at the same time are really looking to make sure that we're bringing into play and interceding knowledge and experience that comes from being an international player and strongly established in other regions. So whether that's around the nature of the dialogue that you're having as part of the regulatory agenda, whether that's the more practical steps to give contribution into development of payment systems, of CSD, the now increasing number of potential market collaborations or harmonisation of exchanges across the region. So I think it's always that, shall I say, best of both worlds, so trying to be a very active part of what's happening within the country locally. And as a provider that's been on the ground for sometimes as long as 150 years in these countries, then you know, we are recognised and respected for the contribution that we can make, but at the same time want to be a source of international understanding and experience that we can bring to play.
Okay, great. Philippe.
Yeah, but we want, obviously in Europe, we want to go through T2S successfully. So by offering, new solutions to clients, offering regionalization offers as well. So T2S is obviously a big focus in Europe, along with all the regulation such as T+2, CSDR, and so on. We can talk about it later. We also, have made a big investment in the US. To run a sub-custody business in the US. So it's a key challenge. But we see a lot of opportunities there to capture additional business, either from us ourselves as a global custodian, but also from external clients, looking maybe at something new and fresh in the US. So it's a key investment. In South America as well, we see some opportunities. So definitely in Colombia, we are looking at Peru as well. So some investment to offer additional markets to our core client base.
Well, if I just look at Asia, there's obviously a lot going on, and actually a lot going on regarding two of the principal markets in the region. If you look at India, there's the FPI scheme that is taking over from the former FII scheme, and that I think will give much easier access to the market for overseas investors. So that's an exciting development, and we're seeing a huge amount of interest in that coming through with requests for applications to be part of the FPI scheme. So that's one thing that's happening. In China, of course, we're seeing a huge amount of activity going on at the moment with regard to the Shanghai-Hong Kong Connect platform. That's meant a big diversion of resources because the timescale to actually set it up and go live has been very short, and I think that's impacting every player pretty much in the market. But it is exciting because it gives greater access to the China market in addition to the existing Q fee and RQ fee quota schemes. It gives another route into the China market, and we expect there to be a great deal of interest in that. I can also just mention the Middle East because, HSBC is the largest custodian in the Middle East. Saudi Arabia is due to open to foreign investment in 2015. And again, that will be a really big development, not just for Saudi Arabia, but for the whole of the Middle East, because Saudi accounts for, I think it's 50% of the total GCC market capitalization. So that is going to be a very big development that could generate additional interest in the region on top of the MSCI recategorization of Qatar and the UAE from frontier market to emerging market status. So I think this can reinforce that renewed interest in the region. So a lot going on, a lot of exciting developments.
Good things going on, yeah. Philippe, as looking at what might be an elephant in the room, but the sort of developments in the US, are they impacting your sub-custody operations, the wider bank developments in
But it's a key investment. I mean, it's a big risk to set up a US custody platform. The project has been a bit delayed, but now it's up and running with good quality. It supports our global custody business in a very integrated manner. So to that end, it's a key success. And now we are actively selling it to new clients. Hopefully, we should sign someone shortly. But it's a market where you need to be. I mean, if you're a big global custodian, I mean, a big part of the assets are US assets. You have to be there if you want to guarantee end-to-end asset safety to your clients. It's a big investment, but it's worth.
So the markets, the developments impacting the bank as far as the news is concerned recently, that's not having any.
Not directly, because the bank is the security services business is just out of the restriction that we have. Obviously, it doesn't facilitate the sales process to domestic players, but the security services business is not at all impacted by anything on this litigation.
If we could stay slightly with domestic regulations, I wondered if we could look at some of the impacts that they're having where you're having an integrated sub-custody offering. So do you find they further that, help that aim, or hinder it?
To be honest, I think with one or two exceptions, the sub-custody business is relatively unregulated domestically. The impact of regulations tends to be the knock-on effect of extraterritorial regulations that are focused on the funds industry. So it's protection of end investor assets, particularly where they are retail investors. So I don't actually find the domestic regulation too onerous as a general point. Obviously, there are changes in the market, and I think what the regulators look to us as a sub-custodian for is they come to HSBC to look at, if they want to make changes to the market, how is that likely to impact the market? Have you seen this happen elsewhere in terms of your global network of sub-custodians? And if so, what advice can you offer? So, and I think this is something that we have always done, but it's actually coming more to the fore. We act as almost a consultant to some of the regulators in the market. But it's not so much for regulation of sub-custodians themselves, it's more for regulation of the market as a whole.
I see. Yes, I certainly agree with that, and I think that level of engagement, interaction, consultation with regulators, certainly in a number of markets in Asia, Africa spring to mind, is probably much higher than typically you would enjoy or see in the West. I have perhaps a slightly different view on it, and for a service provider that has also domestic business. So in a number of the countries where we operate, we are servicing directly institutions, local institutions in that market who are themselves caught by local regulations. So that's where I think we are much more cognizant on ensuring that our product and our service is enabling them to discharge the obligation that they have in their home market. And on occasions maybe that's a little bit or can be in conflict then with sort of the global regulatory agenda. So Colin's absolutely right. You need to have that one eye all the time on what's happening globally, really understanding how UCITS, AIFM is impacting your clients, your international clients that are using your service. And then perhaps how you do align those things if domestic local regulation would seem at one level to be at odds with some of the international regulations. And another aspect too, if you come from being strong and local market by market, making sure that you are interpreting correctly the impact of global regulation on you and your clients, I think is also a challenge in some parts of the world.
I think the dialogue between custodians and regulators is much more frequent now than it ever has been.
Arguably because it's much more necessary than it ever has been.
Exactly, yes.
Interesting. Do you see the same?
We do. We have a bit of different profile as we operate in more mature markets. I think it's more for BNP Paribas services, more global regulation that drive that could be an issue to develop a business, especially EMIR, for instance, whereby we've been forbidden to safekeep assets of CCPs, or where we have still adopt around the recognition of CCPs in some countries where we operate as a branch. So it's still so far it's mostly the global regulation that impact our business.
Maybe just one additional point on local regulation. Again, there are sometimes, there's a regulatory environment or rules in a particular jurisdiction that prevent you from perhaps developing the business in the way that you would. So in a number of countries, I can think of places like Korea and like China, it's absolutely necessary to have a certain number of activities that you must do locally in those countries. So, when you're thinking about how you optimize your operational platforms, how you deliver the service, the ability to, shall I say, offshore or take activity into other countries, create centres of excellence, and all the things that we do to give operational efficiency to our clients can sometimes be challenged because of the position of local regulation. And again, that's something that I think we need to keep front of mind all day and every day.
Yeah, and I think that's something where we as custodians look to influence the regulators. I mean, if I look at the broker outsourcing space, for example, there are restrictions on where you can offer certain models like account operator or third-party clearing. And we engage with the regulators, we discuss why actually this is a good thing for the market. We talk to them about their concerns, and we engage in that dialogue. And there are examples of where, as a result of that dialogue, the regulators have moved their position and actually seen that it's beneficial to allow these services that previously they didn't. Complexity comes because you're very often covering more than one regulator. So you'll often have the central bank, you'll have the securities regulator at least, and sometimes there are others that you have to persuade as well.
Yeah, and that's interesting. So it's not just one regulator in each and every country that we operate in.
And just leading on to the next question there, is there a particular piece of regulation that has provided you with opportunities to boost revenue? Are you looking at certain ones in particular, focused on certain pieces of regulation in particular? And does this help the learnings in a particular market help with your services in other markets, for example?
You're looking at me, Janet. I'm happy to answer it. No, I guess just sort of actually enlarging on the point I made just now, I think the liberalisation of regulations does enable us to develop services that a few years ago we wouldn't have been able to offer. And I think outsourcing is actually a very good example of that. Because previously brokers had to do their own back office operations onshore in many markets, and those regulations have been liberalised. That has enabled them to outsource certain functions to third-party providers. And HSBC has been in discussions not just with clients but with the regulators to clarify those regulations, to determine exactly what can be offered. But that has opened a new opportunity for us to extend the range of services that we offer, particularly to broker-dealers, although it's not limited to that, and enables us to service all of their post-execution needs.
Philippe, are there any particular?
We behave a bit the same. We want to turn regulation into opportunities, and each time there has been a new set of regulation, we've launched a set of products and services to help clients cope with regulation. Let's say, for instance, Basel III, CPS, SUSCO rules. We've launched recently liquidity access to give, client, committed credit lines, auto-collateralization features, and so on. Dodd-Frank and EMIR, we've launched collateral access to enable, asset manager to outsource collateral back office, or for CCPs to source collateral from their clients, and so on. So it's more looking systematically to take it into an opportunity for new services. So. the more the markets are moving at the end, the more value we add, I would say.
I think there's probably another dimension in play as well, and we sort of alluded to it a little bit earlier, but now for our clients, the way that they monitor, oversee, control the relationships that they have with their custodian banks, that's also changed. So our means and our ability to help them manage the service better, to give them the reporting that they need for themselves and for their other stakeholders and their own regulator, has actually also given an opportunity for new service provision.
Looking at the next question on CSDs and market infrastructures, how will you be engaging with these infrastructures going forward, and what impact will the changes on their business models have on yours?
This has got to be Philippe and Europe first.
But in terms of the way we want to interface with CSD, we continue to believe that our asset needs to be self-kept at the issuer CSD level. So we'll continue to have a relationship with all the CSDs everywhere we operate as a sub-custodian. CSDs will to a certain extent compete with us. So some of them are developing, investor CSD offering to support their, a bit more geographies to their domestic client base. In such case, sometimes we support this model by being a provider to CSD in the domestic market. So we pretty much believe we want to be multi-CSD and close to the market, but also we'll compete sometimes and cooperate with CSDs. Then I think what's still the regulation around CSDR has a number of components where we have still some question mark, especially there's the limited purpose bank item that we are looking at, which forbids banks to support banking services for CSDs or CSDs to offer banking services. So it's still something we need to look in more details. But otherwise, yes, sub-custody services at the issuer CSD level and some cooperation and competition between domestic custodians and investor CSD.
Okay. I think it's, and clearly everything that's happening in T2S is transforming the landscape in Europe. In other parts of the world, we perhaps don't have that same, shall I say, nearness of the launch of the utility model that perhaps you could describe in Europe. And some of that is driven by regulation, by politics. We don't operate under central banks or single currency, so it makes those things more difficult elsewhere. Now, that's not to say that even today there isn't an opportunity to collaborate, certainly with the ICSDs in Standard Chartered's experience. When we think about how we're working and developing in a space like collateral management, we are partnering with both Euroclear and Clearstream to enable our clients to have a much better response to how they will need to manage their collateral. So how do we make sure, if you've got assets and securities captive over here, but you've got a need to collateralize elsewhere, that you can do that effectively and efficiently without having the risk and effort of actually physically moving those assets. So that for us is a very exciting way that you can use the capability and the platform of the ICSDs to actually enrich the proposition that you're offering to your own clients.
The other question I had was on the changing settlement timetables. Now, with Europe said to be a first mover, Philippe, this could be one for you to kick off. But from the perspective of what this is going to mean for investors and the fact that we're seeing swathes of them haven't really grasped what could happen, failed trades, the cost implications, could you comment on some of the things that you're seeing in the market with regards to your clients and what work still needs to be done?
Yeah, sure. So it's really tomorrow because it will happen mid-October. What we've, in terms of technical capabilities, just really standard. We operate already T+2 in Germany. What we've seen is a lot of questions from clients around the rules. Whether fixed income were included, convertible bonds included, what will be the behavior for the fund business and so on. What we see is that there will be definitely some mismatching at the beginning of the process, where as the fund still settle T+3 or T+2, T+4, someone will have to fund the delta of liquidity between T+2 and T+3. So we anticipate a lot of increased demand for credit from our sell-side franchise, brokers who are settling with the market on T+2 and being able to settle T+3 or T+4 with their asset manager client base. So we are getting prepared for that. So we have increased, the credit lines. We have some fail coverage capability as well to support this settlement friction. And it's something we are used to in Germany, where still some clients were continuing to settle T+3. At least we are well prepared for the US migration that will happen in the next couple of months to T+2.
Okay, great. And
so I'd be a bit controversial here and say, what's the problem moving to T+2? I mean, most of the markets in Asia operate on T+2 currently, and I guess it is just getting your clients familiar with what they need to do, but as you said about Germany, it's not a whole new concept by any means. So there's obviously a lot that needs to be done, but I don't think it's that complicated. But there's a lot to be done in a relatively short space of time now. I mean, what exercises me slightly more is T+0 settlement, which is what we're talking about in Saudi Arabia, and also effectively with the Shanghai-Hong Kong Connect mechanism, and that creates a lot of difficulties. And in some ways, we need to make sure that we manage the risk that can ensue from that. So that's a slightly more difficult one, I think, than T+2.
So I feel a long way from my two colleagues then, because then when I think about South Africa, here we are steeling ourselves to go from T+5 to T+3, and obviously if we walked around the African markets, you would find a less compelling story. If I think about Europe, if I think about some of the most sophisticated markets in Asia, well then you have the level of automation, the level of efficiency, and a very strong and broad participation across the market. That's not what we have in a number of markets in Africa, and as I mentioned earlier, where you're still trying to get the necessary automation through payment systems. I mean, how can you think about T+3 in that sort of environment? So the logistics are at a very different level of sophistication. So I'm delighted, and I wish Europe huge success with the developments in the next month or so. And I hope there'll be some learning there from that part of the world that maybe in time will then get exported into Africa or other places.
One of the final questions I had was on corporate actions and where the industry is at the moment in terms of automating, standardizing corporate actions. I wondered if you could comment on where you see the biggest risk in corporate actions and developments to perhaps make this a utility function, or a function carried out by utilities, if that makes sense or not.
I guess the biggest risk is simple operational error. You key in a 10 instead of a 1, or a 100 instead of a 10, and that has significant consequences. I mean, at its most basic, that is where the risk lies. But I think also as we see corporate actions becoming more complex, there's really making sure you have people who are very, very experienced in corporate actions, who understand the details and can explain those details to clients. So I think that is one of the key aspects. And you get markets like Australia, for example, where corporate actions can be very complex. They seem to take great pride there in having the most complex corporate actions of anywhere. As regards consistency of approach, consistency of format, I don't think we are even off the starting blocks yet. I don't see any convergence of corporate action formats or announcement types or whatever. And I think what would be needed to bring that about would be really, first of all, within a country, you need the stock exchange to have it as a condition of listing that there is a certain template that is adhered to. And then, you know, if you're looking at it internationally, I guess, you know, you would need a supranational body to look to impose that on its members. So, as I say, I don't think we've really started down that track yet. There was talk 3 or 4 years ago of using the XBRL language to act as a common format, and maybe that will happen, but I think we need to get all of the stock exchanges, because they're the ones who can require that as one of their listing requirements, who can require consistency. I think we have to get them on board as a first step.
And put pressure on the issuers as well. Yeah.
And I think that, you know, that's is becoming more important if you think of, you know, where the activity and the volume growth has been in corporate actions. I mean, 10 years ago it was all around Europe and the US, but now markets in Asia, Australia, Hong Kong, Singapore are in the sort of top 10 list of the markets that have had the most corporate events. So, you know, I think that's something to think about then in terms of how you manage those volumes. And yeah, without that standardisation, it's a challenge. I mean, we've within our business model tried to take steps to, if you like, better manage corporate actions and give better service to clients. So within the last 12 months we've completed a sort of re-platforming of the technology, which now ensures that we have the same sort of corporate actions processing capability across the 43 countries where we offer services. And not only does that make it easier for ourselves, but then our sort of control disciplines around that we can make much more consistent and have a common standard across those. So hopefully that's a way that we're trying to reduce, you know, the basic error that clearly we and our clients are always exposed to.
I think that's absolutely right, and I think that's where the custodians bring a huge amount of value to clients, because, to use a point I made earlier, you know, you can insulate your clients from some of the differences within the markets, and I think that's a key thing that a multi-market sub-custodian can do.
It's core to our service. I mean, we've invested in as well in university, what we call the BNP Paribas Security Services University, to train people on corporate action processing. We are also optimizing our model between local and global custody, making sure that you know that a corporate action is built and set only once, whereas before it was built at sub-custody level and at global custody level. Now we are streamlining the process to make sure the risk is only taken once. So it's a lot of investment, but it's part of what we do. It's part of our DNA on business.
So certainly we can help ourselves, and even if we never get to Collins Nirvana of a single global standard, then you know, in that, I think that whole dialogue with exchanges and so on, the things that we can do to try and encourage their adoption of the global standards that do exist, is also another means that we can help ourselves a little bit more short term.
Yes, and you know, there's always a question. I think you mentioned, should we be looking to build a utility, which makes logical sense. I think you would then get down to the question of, well, where would the liability lie in the event of errors and so on? Because if you have a utility which might very well have a value in terms of using common standards and so on, if you've then got to, if that utility is not then prepared to take liability for the information it provides, you're back to having to scrub the data once, twice, and that is where you've got some of the complexity and some of the labour-intensive and cost aspects of corporate action processing. So we would need to tackle that particular issue as well.
Finally, if we conclude with some of the main challenges that you see going forward, lots of regulatory change, lots of opportunities, but what will sort of keep you awake at night in the coming years? Hopefully not too many things, but where are the sort of areas that you occupied, will occupy your minds?
Well, I just honestly say not much keeps me awake at night.
That's good.
You know, but I think in terms of where the industry is, you know, there is a constant dynamic in the business that we're working in, and so that energy, that desire to find the win-win. So what is the right outcome in response to regulation, in response to client change, that puts both the client and the bank in a good position. And that's a constantly changing feast. That's never something that we've completely concluded on. And so it's the ability to support and enable your client's success in a constant period of change.
Okay, great. Thank you.
To me, there are two items. The first one is segregation. I wonder whether in 5 to 10 years we'll be asked to fully segregate all our client base into a CSD. And I think I was sharing with people from Dutch Bank yesterday, and I think there's at least in Europe, on the regulation, the rule for asset safety and so on, you might be obliged to transform your business by operating in a fully segregated mode. So that's a concern we need to have in mind in the next couple of years. And also collateral. I mean, will collateral become a key driver for custody? And are we enough prepared at BNP Paribas Security Services to cope with that trend? Do we need to reinforce cooperation on tri-party models and so on? It's really not a worry, but something that it's important to have in mind.
Thank you. How about you, Colin?
Well, I have been staying awake at night because of the 12-hour time difference between Boston and Hong Kong. But I think in terms of the securities industry generally and the custody industry specifically, I think we just need to see ourselves as another business, and all businesses. I think build on what Margaret was saying. In all businesses, there are different levers that are being pulled or pushed. There are changes coming about, and as an industry, we just need to make sure that we keep abreast of what's happening. We're able to adjust our services. We're nimble enough. We're dynamic enough. We understand our clients enough to be able to provide them with services that are relevant, that add value to them, so that we can continue to charge them for the services we offer and be able to get a commercial return from those services. And I don't think we're any different from any other business at all.
You're any different from where we were 10 or 20 years ago?
No, I mean, if you look at dematerialization as an example, 10, 15 years ago, people were forecasting the end of the custody business. But we've successfully reinvented ourselves where actually it wasn't the production line settlement of trades and so on that became important. It was the provision of information, it was the provision of expertise, risk management, all the things we've been discussing around this table that meant that the sub-custodians remained very, very relevant to their clients. And that to me is what is absolutely key.
So we're looking at constant evolution, staying on top of regulatory developments, and thereby helping your clients to stay on top of these developments and earning the suitable revenues as a result will be the key drivers going forward. And with that, it leaves me to thank you very much for your participation and contributions in this round table. Thank you.
Thank you.
Thanks.
Thank you.
Thanks.